In today's video, we are going to be talking all about Forex leverage. Now, this is a very key topic, so make sure you stay tuned to the end of the video to find out some of the pitfalls that you want to avoid when it comes to leverage, and also the proper leverage that would be good potentially to consider for your own account. Stay tuned. Hello traders, investors, and entrepreneurs. Welcome back to my channel. If you don't know me, my name is Nick, and I share all sorts of content here on YouTube around the Forex market, investing, and entrepreneurship. So what we are going to be talking about today is we're going to be talking about leverage when trading the currency exchange market. Now, here's the thing. If you are a newer trader or you're an experienced trader, a lot of people have questions about leverage and what kind of requirements they need, what kind of brokers they should be using, and some definite things to avoid when it comes to leverage. Now, if you're a newer trader, then I want to make something very clear. Leverage, a lot of times, is this idea that you can make a lot of money on a very small amount of money. If you have something like a $200 account, a lot of newer traders are very excited by the idea of having leverage because they could have something like 500 to 1 leverage, which gives them a tremendous more ability to turn that $200 into much more. You know, it's exciting because a lot of times people get the idea that they could take their $200 and with leverage, they could theoretically make it into $20,000 in a relatively short amount of time. Now, to be fair, this is entirely possible. The problem is we don't get reward without adding more risk. Unfortunately, leverage does not necessarily make our risk less so. In fact, it exponentially increases our risk when we increase our leverage. So the more size we are taking, the bigger our lot size, obviously the more money we can make. But more importantly, in my case, when you've been in the game for a while, when you've been trading, you know that more importantly, this increases our risk. And so when it comes to leverage, my possibly unpopular opinion when it comes to leverage is to use as little leverage as you can possibly use. This is my opinion. I think that you don't need to use a tremendous amount of leverage to make a lot of money. Now, when it comes to currency exchange, though, we do need leverage of some sort. So what we're going to do is we are going to talk about what's an appropriate amount of leverage, what kind of leverage do you actually need, and why do you need leverage in the first place? Well, when it comes to currency exchange, what are we actually doing? We're trading currencies against one another. If we are taking a look at the Euro USD, well, truthfully, this currency pair in terms of percentage-wise really doesn't move that much, right? It's not like we're seeing something like if we were trading Tesla stock or we were trading Bitcoin or we were trading something, different like gold maybe, right? Where we see these bigger swings. We don't see 10% up in a day. We don't see 20% down in a day where you can capture those bigger gains. So this is where leverage comes in. Essentially, a broker makes it possible for you to borrow currency, right? Actual currency, so that you can capture bigger movements in the market. Think about it this way. If you only have $200 in your account, well, if you have 200 US dollars, the actual amount of that US dollar is very, very small. It is going to go up or down in very, very small amounts. Your value of that $200 might actually only go to something like 199.99. So you might just have a very small movement, and that's only a difference of 1 cent. So that's really not going to do us too good. So what a broker does is it allows you to use that $200 on margin. Basically, you're going to pay the broker back if you lose all of that, right? It allows you to trade this $200 on margin or leverage it up and essentially say, well, actually, I'd like to magnify, amplify, if you will, the movements of this currency exchange. So if the value goes from, this amount to this amount, a small movement in the actual value of the currencies relative to one another, I want to profit bigger. I want to profit a larger amount or lose a larger amount by applying leverage. That's what a broker does. That's why retail traders need a broker in order to actually interact with the currency exchange market. So now that we understand that, what are some things to think about? How much is an appropriate amount of leverage? Well, me personally, when it comes to the leverage that I use on my own accounts, I really don't think I need more than 50 to 1 leverage as long as I am using proper risk management and using small positions. In fact, I like the idea of setting a 50 to 1 leveraged account because it allows me to not get crazy with my position sizes. If I'm trading something, I want to risk, let's say 1% of the account on a trade. If I want to do that, I don't need an incredible amount of leverage in order to get a position going that's going to risk 1%. In order to do that, let's say that you had a $1,000 account. Well, you have $1,000 in your account, you want to risk 1%. Well, that means you need to risk $10. Well, if you risk $10 on a $1,000 account, and let's say that you're doing, 100 pip stop loss or a 10 pip stop loss, the actual lot size that you're going to need is not going to be very big. And so you don't need a tremendous amount of lot size or a tremendous amount of leverage. If you are trading a much larger portion of your account on any particular trade, I would personally caution against this because you may be kind of going into the territory of risking something like 10+% on a particular move, which, think about it this way, if you're risking 10% on a move, it only takes you 5 losses in a row to get down 50% on your capital. And actually, if you actually do the math on that, it would actually be quicker than that because you're losing capital along the way. We won't get into the math, but just understand that as you lose capital, the percentage, it does matter. And so the more risk that you apply to your account, the more, obviously the faster you can lose the account. And so when it comes to leverage, I don't need more than 50-to-1 leverage. A lot of times you're going to see brokers and you're going to see people wanting to show that they have 500-to-1 leverage or even further 1,000-to-1 leverage. Now, what are some of the perks and some of the cons of this? Well, obviously this is a perk to some people because theoretically you could take a small amount of money and leverage it up like crazy and you could see that account fly to the moon, right? You could grow an account really, really fast. On the contrary though, of course, you do not get reward without adding risk. And so with that said, essentially when you leverage up an account like this, you're basically amplifying the moves tremendously. So think about it this way. The best way I like to look at leverage is to understand that, okay, the swings in your account are like this normally. Let's say that you have 50-to-1. Well, when you go the route of doing 500-to-1 and you start using all of that leverage, right? You apply bigger positions. Your account swings are like this, right? You get much, much crazier ups and downs. And the problem with this is that just a series of losses can lead to blowing an account rather quickly. And so personally, I avoid this style. I'm not the kind of trader to go big and to go heavy. I would rather build a profitable system on lower lot sizes, building the account over time rather than trying to do it quickly. The cool thing about the foreign exchange market is it'll be around here forever. The exchange rate between different currencies is not something that we will probably ever see go away. And so I like to take my time. I like to keep my position small and I don't need a lot of leverage. So my opinion, 50-to-1 is perfectly fine. In some places in the UK, I know, even 30-to-1 is probably just fine if you're willing to use small positions and you're willing to be patient with your trading. Guys, I hope you got something out of this video. If you did, make sure to give the video a thumbs up down below. Subscribe to the channel if you are new. Let me know what you think down below in the comments and we will see you back next time.